Start the recording. All right, welcome everyone to our market analysis call for April 26th, or in order to prepare for April 26, 2017. Just a quick disclaimer before we get started. This is for educational purposes only. If you have questions about your individual investment needs, I recommend you talk to your investment advisor. All right, so let's start off by taking a look at our Forex factory here. One of the big things that we have coming up here is the monetary policy statement from Japan. So this will be, well, in the Asian session. It's usually a little bit later in the Asian session, closer to the London, opening of the London. So basically, Bank of Japan is not really looking at, especially with everything that's going on around the new presidency. We have seen that the U.S. is cutting down. A lot are wanting to put tariffs and other things, and really cutting down on the trade or imports from other countries, which means Japan would be one of the impacted countries because we in North America import a lot of Japanese products. So as a result of that, that could have negative impact on Japanese markets and Japanese economy. So I don't expect Bank of Japan to at any point start talking about contractionary monetary policy. So their monetary policy statement is likely to stay expansionary at the moment. I think they're still going to continue on the way they were. And as a result, that would be negative for Japanese yen. So other things we have seen that everything else has been going up against the yen, especially with settling down of the conditions. So from monetary policy perspective, we are not expecting them to tighten anything. So that's for Bank of Japan. In terms of our, what we do have coming up is also ECB. So this is, ECB is supposed to be tomorrow. So in terms of ECB, they, on the other hand, are going to start talking about cutting down asset purchases. So they are likely to start talking about tightening of the monetary policy. They're not likely to not talk about raising interest rates, but they are going to talk about cutting back on the on the asset purchase program. So as a result of that, basically, so this is just one of the banks, EFX does this. So this is Nomura FX Strategy Research. So what they're saying is that ECB meeting on April 27th. So what they are looking for is they're not looking for any shift in terms of what they had said previously, and I don't recall what they had said previously, but I'm pretty sure that they are looking at, but here it says overall, they will look for a possibility of any changes in the ECB economic risk sentiment, but ECB officials have been already talking about cutting back. They're going to look at normalization sequence. This is what I mean. They're going to look at cutting down on the free money flow that they've been going on. As a result, if they mention that, euro is likely to go up. So they think that the initial euro reaction to the ECB announcement is likely to be muted again, but argues that dips would be a good buy. So that's what they're looking at. They're not going to do anything just yet, but I think that they're going to mention it at this point. So that's what market will be looking for going into this. So looking at our calendar tomorrow. So starting off, we have Bank of Japan policy rate outlook report. We already talked about that, tied in with the monetary policy, not likely to change the interest rate here. And then we have press conference in the London session. So again, this will create volatility for yen. And then we have RBA Governor Lau speaking. going into the US session, right at the beginning of the US session, we have ECB press conference. Just before that, we have the minimum bid rate. So they're at 0%, and they're not likely to change that. However, they are expected to start talking about tightening. So that's what we are what they're mentioning here. At 8:30 will be the press conference. This is likely to be volatile for euro. And then for the US here, we have unemployment numbers and core durable goods orders. Both of these numbers will be important, especially with negative, not negative, but we have seen kind of muted numbers out of the US lately. So if you see more of the muted numbers, that would not be good for the US dollar. So basically tomorrow into the US session, we should expect volatility in the market as a result of that. And then further down, we have a ton of news tomorrow: pending home sales, building consent. Oh no, that's it. Sorry. And then in the Asian session, we have building consents and household spending and CPI numbers, that type of stuff from yen. Biggest one will definitely be Bank of Japan and ECB, both central banks. So keep that in mind. So let's move on to our charts here. So euro dollar daily chart here. This is our move today. So market came and touched the bottom here from yesterday. So we basically traded in the range the entire day. We traded in the range, went and tested the high, came down, tested the low, and then pulled back after the tax reform proposal was unsatisfactory. At this point, leading up to the ECB statement, we could see a market that's more range-bound till ECB comes out. If they do talk about cutting back on their monetary policy, that would be positive. So we could then see euro go up, and basically what we could look for would be price going above the high here, pull back, and then another move to the upside. So this here is a good target, 110. It's a psychological level. And if things are, the way we expect them to be in terms of monetary policy, that's the level that we could go and touch tomorrow. However, if market takes that as a really positive or has a really positive response to that, then we're looking for this 110.60 level, which is this previous support and resistance level. Again, this was an important level where price had reacted multiple times. So we could see a big, huge move to the upside. But at this point, because we do have French elections still, it's not done yet. Altogether, we may not see the entire move tomorrow. So I would be cautious with this, but overall, we are still bullish. However, if they fail to mention anything about tightening of monetary policy, then we could drop, and this is the gap that we are at that could get filled tomorrow. So at this point, we have to be open to both sides, but right now, market sentiment for euro is definitely bullish. So keep that in mind. Pound here, very, very bullish. We had this big inefficient move up, came down right into the pivot point, got filled, and now it's holding the highs. So this is where we are. It's still trading in the range here. It came down, got stuck here multiple times, and now it's pushed back. A very, very neutral close for the day. At this point, it is holding the highs, so it could go all the way up to test the highs, 129.00. So this level has held for some time now, which means once it breaks, we are likely to see a big break, which means we could see one of these and then there, and we could go all the way up there. So this will be the next target once we see that break, but we need to see a break before we trade this. At this point, it's best to trade this as a range-bound market with the upper target of 129 and the lower bound of 127.70 level. So going into the looking at the 1 hour chart here, this is where we've been for the entire week. So 1, 2, 3, 4, 5, 6 days, we have been in a very, 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 very tight range. And when market is in such a tight range, the breakout is usually big. So if the market comes down to, if the price comes down to 127.70 and breaks below this level, then we could see a big break here, kind of like this. Then we could see this inefficiency to get filled, at least up to here as a starting point, and then up to here as the second one. However, market sentiment, especially with stabilization, with the French elections, there is still positive sentiment for the British pound. So at this point, I'm not looking for a huge move to the downside. I'm certainly not looking for it to come down. I was looking for it to come into this 2600 area, and then we could have a long trade initiated off of this one. I'm kind of reluctant to buy it here till it actually breaks through. I would like to see what it does at the 12900 level, how it reacts at that level. But buying into the highs is a little bit difficult. But if it does break out above the 12900, then we could look for a pullback for another move into this 130.50 area. So that's the pound. Looking at dollar CAD has been very, very bullish. Today we did have a bullish close, even though we did pull back a fair bit after the oil inventories came out. Oil took off, and as a result, we did see this comeback. However, now we are back up, especially when you start hearing about comments around renegotiating NAFTA or pulling out of NAFTA, that will be problematic for both Canada and Mexico, and dollar CAD as a result is likely to go up. So now we have seen a push above. So the next target here, we are bullish on this. Next target is 136.50. So if we pull out here, so this is the next target, important support and resistance level. And we haven't been here since February of 2016. So that's a long time. And now that we have broken above these previous highs, we could easily get to this 136.50 level. And once we break through this, we are into 13800 level. But in between, there will be another level right about here, which is 137, I would say around 20-ish level. So somewhere around here is what we're looking at, in between level. But the first target will be 136.50, which is right there. So not that far. Oh, I guess that's only 20 pips away. So in that case, we can mark, yeah, I think that's the next one here. And then this pin right here. So 37.34. So I would say about 20 level, 37.20 level. So bullish on dollar CAD. Let's take a look at the 1 hour chart. As we can see here, price broke up, did a pullback into R1, broke up higher to today. Just stayed above this pivot point, did dip back into this previous support and resistance level right here, but then bounced up. Now we are back into the highs, and it, after struggling with the highs for a little bit, it's breaking up to the upside here. So now we could see a pullback and then another move to the upside. So that this one's not too far, which also is very close to our R2 level, and R1 is right there. So small move today, very small move today, but then nonetheless biases to the upside. Aussie dollar here, we were looking for a drop yesterday. So the CPI numbers, inflation numbers, actually came out slightly negative. And as a result of that, Aussie dropped a lot. This was a target we had marked, and it went below that. So it went all the way to this next level, which was slightly below what we had marked. So at this point, the bias is certainly to the downside. However, since it has been a big move, we could expect a bit of a retracement in this. So 75.13 or about 20 level is, so 75.20-ish level. We could see a pullback and then a potential drop in this. So something like this, and a drop into 74.30 area here. So do keep in mind we are coming into month end, and month end flows can be in the opposite direction. So keep that in mind as we go into Friday and then into the end of the month, that all these moves where price has been going in one direction, we could see price sort of reverse direction or do deeper pullbacks because the traders will be booking profits. So keep that in mind, but at this point, that's the move I would be looking for. So biases to the downside. And here we are. Looks like I'm missing the pivot points. So let's drop them in real quick. Okay, here we go. So the pivot is right here at about 2,500, just below the 2,500 level. This is actually a good support and resistance level. So 75.20 is certainly a good level right here. And that will be a place for a deeper pullback. The first pullback actually aligns with our pivot point very nicely into 7,500 level, which is right here. So we could see a pullback up here like this, and then a move to the downside. So this is the first level, and then 7,500 will be the second level that, oh sorry, 7,500, so 75.20 could be the second one, which means we could see a pullback all the way into here and then a drop. So bias is to the downside, but I would look for these pullback levels, slightly deeper pullback levels. So keep those in mind. But from bias perspective, looking for further downside. New Zealand dollar did drop quite a bit, right into actually below our our target. So we kind of went lower, almost into the lows here. So at this point, zooming out, here we are. So this is the support and resistance, where it's coming from. And this is where we are. So it's an important support and resistance level right here. So in this case, we could see a pullback. So pullback could be into this level. So we could go as high as the high of the day today for potential pullback, which is this support and resistance level, or the closer pullback level will be right into here, 69.20, and the higher one would be 69.50. So I would mark those down as the pullback levels. But bias-wise, we are biased to the downside, but cautiously biased to the downside because we are into important support and resistance levels now. And looking at the 1 hour chart, as you can see, we have like 3 pushes to the upside here, triple top, and then huge drop, and now we're continuing to the downside. So this could be, we could see this pullback all the way into 69.50, and then the closer one is essentially right here, 69.20, which is not that far. But I would be looking for maybe this 69, even so 69.50-ish area, so somewhere in here for a potential pullback. So I would be cautious because it is into the bottom there. Anything else you would want me to look at? Or any questions? Okay, I would take that as a no. So let's wrap it up for the day. You guys, keep those levels in mind as you trade tonight, and I will see you in the morning in the trade room.